0. Good morning, SMF MMTs and our worldwide international traders as well, and our complete total network from the newest to the oldest, the least experienced to the most experienced. Doesn't matter. What does matter is that we're gathered here to take a look at the bearish bets on the S&P 500. What I will in the first video, MMTs, is that I'm going to highlight your open interest first. The second round is that we're going to take the most volume of bearish bets that the bigger community is putting on the S&P 500 for bearish shorts, meaning that they're getting very, very heavily short these markets up toward the top. As we know earlier in the first videos in the training session on 2/19/2011, is that we did the overbought and oversold. One of the things that we're going to highlight, and I'm just going to start off, is that the strike price here, and the whole time that we've been going higher on the S&P, there's 125,000 open interest on the 1200 put. There was 16,000 of these contracts traded on Friday of the 1200 put for expiration of 3/19/2011. The next contract we're going to take a look at is the 1215 put option. What we have here was 22,000 put options below the market at the 1250 strike price on the S&P bought. Oh, I'm sorry. 13,000 of the put option right here was bought. 22,414 is a historical volume. You had 13,243 that was purchased on Friday. Okay? Open interest, 214,295 contracts. If that's not a heavy open interest at the 1250 strike, that means that people are betting that the S&P 500, the big S&P 500 option traders, referred to as quote, quote, so-called professionals, are betting big right there. Now, the opposite trade is a 1250 call strike price, that these are $91 and $94 a contract. There's 172,000 open. The thing that we look at between bear and bull, that same contract on the put side is only, the low is $3.45. It's quite common to see these come down and these go up because you're inflated here and you're deflated there. Moving on to the next contract. Brian Plain, how did I end up with 331? I don't need these here. No. Delete. That must have been my fault. All right. What strike prices were those that I just deleted? Maybe I did that and didn't get
1310, 1320
for
April.
But I didn't. I still no, because I just deleted 331. But I got 1310 and I got 1320 up here, so they had to be April. That's what I was looking for.
You got 3 Aprils in there. That's what I got.
Okay,
in mind.
that's not my question.
Okay. What ones are you missing? Let's see.
No, look it, man.
I know. I got the same thing. I had the same thing you had.
Hey,
so
please, don't talk to me. 35,000. All right, we'll get below there then. What was the open volume, though? 35,000 traded. 1310. And Brian Plain said 1320. 1310, I already have the 1320. Where was the other one that I'm missing here in April? Was it the 1300?
There was a March 1340 put that traded 29,768.
That's in there.
I already got it.
Okay.
Where was the big one for
12,
April?
You had
there was
1320,
1310, and somebody was buying the 1250s. There was 13,000.
So then I have them all, right? Why do I have a 416 1300 with 721 traded? I don't need that. It's not a big contract. Page, save. All right. Is there any big whoppers? Okay, so let me go back on here. Basically, I'm sorry I didn't get the resume button on this video. Here are all the bearish bets on the S&P 500. And I'm sorry, there was 36,000 contracts traded at the 1320 put, only 89 open. 36,000. 35,000 bought on Friday, the 1310 put. That's below the market. Big bears, big institutional puts, 1250 put. What a whopping big buy right here on that 1250 put. Here, I have the same 1250 put twice. Let's delete that one. These are the bearish bets. Here's the one that I was really looking at, is that 1340 handle for the March 29,000 open interest that was traded Friday. Prior, there was only 7,800. So this is the bearish total volume traded on Friday in that column. This is the total open interest here, MMTs, and they're all big bears. We threw a couple of calls in here so that you could see the difference between inflated and deflated. Now on the next video round, we're going to go to weekly charts, and I'm going to throw the call side in and the put side in. I'm going to show the inflated and the deflated, and it's all related to bull trends and bear trends and what side of the market, so that when we get that correction, that's the trade to be. It's how to hedge a portfolio. It's how to make money intraday. And once again, you don't stay lopsided at 94.60. And here's a perfect example, 1250 call. What a great bull run in these contracts. But when you look at the 1250 at 345, this is the side of the market I get on. This side's expensive. This side isn't. So there's a premium trade on a pullback at that 1250 put. But boy, you talk about 214,000. That's the biggest contract for March so far. And then the 1200 is right below it. So you got some big bets being put on.